Hello and welcome to this week's Australian Stock Market Report. Now this week, we're going to look at how you can break the debt cycle. Then we'll get into the Australian stock market so I can share with you my thoughts on where it's heading, along with answering your questions and looking at stocks for you. Hello, I'm Gillham, the Chief Analyst here at Wealth Within, and we're Australia's most trusted stock market educators. And before we move on, thank you for showing your support for our channel and hitting that subscribe button. Remember, as you subscribe, click that bell on the right of it so you keep up to date with our latest videos. Also, remember to tune into our live Australian stock market show every Tuesday, 7 to 8 p.m. Australian Eastern Daylight Savings Time. Now, this is the show where you get to ask us, the stock market education and trading experts, to look at your favourite stocks and answer all of your questions. Now, over the past year, there's been a lot of talk around rising inflation and interest rates, and how the RBA will handle the economy. Following the 8th straight interest rate rise last week, the talk around mortgage stress has also increased. And whilst I'd like to be the bearer of some good news, unfortunately, that's not going to happen, as I believe more rate rises are coming. While interest rates have been rising to levels we haven't seen in over a decade, they are returning to historically normal levels. Now, despite the fact that it makes sense to plan for such events if you have a mortgage, unfortunately, the average household spends the majority of what they earn rather than planning for the future. This explains why a large percentage of Australians cannot survive without an income for more than a few months. So how can households break this cycle? Well, first step is never borrow the maximum of what a lender will lend. Always leave a safety buffer. When buying a home, never borrow more than 80%. The next one is when using a credit card or buy now, pay later facility, only use it if you can pay it off the next month. Always categorise your spending into 3 key areas. The first is what is essential to maintain your life, such as a roof over your head and food. Next is what's important but not critical if you don't have it. And lastly, spending on lifestyle choices, and these are the things that you can survive without. There's an old saying from US footballer Jerry Rice that states, "I will do today what others won't, so tomorrow I can do what others can't." So I challenge you that before this year ends, take the time to sit down and plan, and then put it into action, so that by this time next year, you will be in a much better position. Now it's time we get into what were the best and worst performing sectors last week. Now the best performing sectors, they included materials, and that was up 1.87%. That was followed by consumer staples up 0.02%, and consumer discretionary down 1.77%. The worst performing sectors included information technology down 4.74%, followed by energy down 3.31%, and financials, that was down 2.57% last week. The best performing stocks include Fortescue Metals up 8.69%, followed by Orica up 6.56%, and Rio Tinto, that was up 4.66%. The worst performing stocks included Downer EDI down 25.55%, followed by Allchem down 8.96%, and Pilbara Minerals, that was down 8.02%. Before I bring up the charts and get into my thoughts on the Australian stock market, I wanted to remind everyone that this will be my last Australian stock market report like this on YouTube. We are taking a break for about 4 weeks, and next year our aim is to have a more detailed and expanded report being produced for talkingwealth.com. We are taking a break for about 4 weeks, and next year our aim is to have a more detailed and expanded report being produced for talkingwealth.com. These changes will make subscribing to talkingwealth.com worthwhile for you, and again, these reports will only be available on talkingwealth.com and will not be put up on YouTube. So if you love watching these reports in 2023, you will need to head over to talkingwealth.com. So what do I expect in the market moving forward? Well, let's get to the charts for our S&P 500. All Ordinaries Index update for this week. We'll also answer your questions and look at the stocks that you've chosen for me. Well, after 8 weeks of solid rises on the Australian All Ordinaries Index, last week our market was down, which is, I could say, not unexpected, as I've been expecting a downward move on our market for the last 3 or 4 weeks. So how deep is that move likely to be, and how long is it likely to last? and what's going to happen running up to Christmas and into early New Year. So let's go and take a look at the charts right now. On your screen, we've got a monthly chart on the left and a weekly chart on the right of the screen. And you can see here how so far December has turned down here on the left-hand side of the chart there. Nothing too much to worry about. As I've said, there's plenty of strong support for our marketplace, but it looks really nice and bullish, and I do like it because obviously, the moves we've had over the last 6 to 8 weeks have pushed it right through that August high there of 7,386 points. So I do like what's going on now. And obviously, as our all-time high back from January, 7,956.30 points. And I think if we only have a bit of a short move down here, we will get up near those sorts of levels, near that all-time high. I don't think we're going to break it this year unless we have something spectacular happen. But let's go down onto that weekly chart, and you can see last week here our market fell down, closing there at 7,406 points. Now interestingly, you can see the low there of 7,362 points is slightly below that August high there of 7,386 points, so just a little bit below there. And then it just rebounded back. I mean, obviously there's a bit of supports provided from that the previous high in August, but I don't think that's going to hold. I think we're probably going to get at least another week down, maybe 2 weeks down. And I do think, there's really, really good support there at 7,200 points, which is not too far away from where the current price level is. And there's a lot heavier resistance there, or support, sorry, at the 7,000 points. But let me go and put on my little tool here, and I'll just show you how much in terms of percentages that is. If we're looking at the close on Friday being there, we go down to, oh, that didn't work, did it? Let me get that, and I'll do that again. So if I just put there on the close on Friday and drag it down to this level, you can see about 2.7% right through to that 7,200 points, and around 7,000 points we're looking at just over 5%. So there's really not a big issue here in terms of whatever the fall is going to be. I don't think it's going to fall further than that 7,000 points. Another week down, I'd be super happy. 1 week down and then starting to turn back up again. 3 to 4 weeks down would still not concern me too much, but as long as we didn't break that 7,000 points, I think I'd be really, really happy. So we may not see, as I was saying, we won't see the all-time high broken this year. So that all-time high back from January, I think that'll be into early next year, January, February. But I think the market is looking good. The shorter this move down over the next week or two, so if it's only another 1 more week down and we don't get to that 7,200 points, I think the market will be really nice and bullish. So at this point in time, I think the market will be bullish right through till February, probably maybe even into March, and I think it'll be good. I think it will break that all-time high in early 2023. So everything's looking good. But again, like I've been saying the last few weeks, be patient right now. Now's not the time to jump into the marketplace. You're going to see a lot of good, really nice stocks actually coming off on their prices, and so you're going to get some great stocks at much cheaper prices once the down moves happened. So over the next couple of weeks, obviously this being the last report for 2022, and I'm not doing another one for the next 4 weeks, you're going to have to gauge for yourself when the market stopped falling. And I think, to me, it's always err on the cautious side. So whilst it's going down, don't jump in, and this is where I really don't like people jumping in while stocks are falling or the market's falling. You really need to really wait for it to find that base and then start to move up again before you jump in. And I know a lot of people think, I can get in at a cheaper price if I jump in while it's falling, but it could fall further. As I was saying, right at this point in time, I think at least 1 more week down. So this week, I believe it will fall away, but it may not. But it could be 2 weeks, it could be 3 more weeks from here, falling away down to that 7,000 points. So you don't want to be buying here for the stock to keep falling, or the stocks to keep falling and price to keep falling. But your choice, if you've got a medium to longer term view, what's a few percent, if, as you said, or as I said a little bit earlier, it's 2 to 5% drop on the market, maybe a little bit more on the stocks or a little bit less on the stocks. But what you're doing is you may be able to get in at a cheaper price. And if you've got a medium to longer term view on a good stock that's fundamentally sound, then your choice from that. But the market is looking really, really good. I'm not worried about 2023, and I know there's been a lot of talk, as I said earlier in this report, about interest rates, recession, etc., etc., and a lot of people saying, the market's not going to be good. I really do take the contrarian view, or Janine and I do, and we mentioned that on last week's live show that we talked about. I think 2023 is going to be a great year because generally in recessions or recessionary environments are great for the stock market because at the end of the day, everybody's looking the other way and not wanting to get in the stock market, which leaves prices very, very good for you and sets yourself up. And now's the perfect time to be learning how to trade and invest in the stock market. All too often, and I've been seeing emails from people more in the last few weeks like, oh, when the market's going, next year's really recessionary, so after the recession, I'll come and do your courses and learn. But that's the wrong time to learn. When the market's really bullish, the temptation is there to trade to make a lot of money. When the market's not super bullish, the temptation's not as there to try and jump into the market as quick as you can. The best times to learn is when the market's going down or sideways like it has this year. They're the best times because you're not really tempted to rush the whole education, and now is the perfect time to get into the marketplace. Now, I know if you are considering getting into the stock market and learning about the stock market, I know there's a special offer that our team have that only lasts for another week or so. So if you have thought about it, give our team a ring. They're all traders themselves. They've all done the courses themselves. Our guys and girls are all traders themselves. So they're the people you're going to talk to, and they know the journey that you're taking because they were there for themselves. So give us some call, or give them a call on 1300 858 272. That's it for my take on the market. Let's get into the questions that you've asked for me. Alrighty, the first question we've got today is from, it looks like Daryl, and Daryl says, "Hi Dale, can you please take a look at BSL? I'm currently looking at an entry based on the weekly chart, possibly breaking a downtrend. I was hoping it could break and close above the 1850 mark this week for a possible buy. From a fundamental view, I am happy with the stock. I want to time it right. Now, I appreciate your feedback as I'm pretty new to technical analysis, but your course is definitely helping. Thanks." So Daryl, let's go and have a look at the stock for you. So it's BSL. So it sounds as if you're doing I'm guessing maybe a trading mentor course, or you're just starting our diploma course. So if you are, then you're going to learn a hell of a lot. So congratulations for doing that. But let's go and have a look at BSL for you. Now, it is on the screen here, so there's a monthly chart on the left or weekly chart on the right, and you are looking at the stock moving up, and you're saying closing over 1850. Well, there's the close there at 1822 last week. I had a high of 1862. I'm not sure why 1850 is an important point for you, because you didn't articulate that, and without putting a lot of analysis on it, I may not figure it out myself. But looking at this here on a monthly chart, you can see that it really has gone down beautifully in a nice orderly trend since that August, way back there in August 2021. Beautiful little trend down there. It looks to be finding some support around here. If I put my support tool on there, or my crosshairs on it, you can see there's some support around that sort of 14-15 mark. I do like this. I think this is a really, really great choice for yourself. It's broken above that high from August at 1802. It's looking nice here. We've had 1, 2, 3 months where it's closed, 2 months it's closed higher. Currently we're here in December with really basically 2 weeks of data through there, so I do like that. I think you've done well. I think it's a nice medium-term trade. I was going to throw just a roughie on a rough trend line on it, if you can call it a roughie. You got a bit of resistance possibly coming up through there. This is not a trend line, so please don't suggest that, but I do like it. As I said, it's above that sort of August high, so I do like it. I don't have a problem with this one in my book, and fundamentally, as you said, it looks okay. I believe this is a stock that Janine actually likes as well, and we do like this area, so I think this is a great pick. I think you should do well out of this stock. So thank you very much for the question, and I wish you well with it, and good luck with the course. And remember, with the course, we're always there to be asking questions. The team is really, really good at support. I think this is the best support team I've ever had, and that's not being rude to past support people, but my biggest advice for you, if you are doing a course, is to ask lots of questions, because the team will respond to you very, very quickly. But let's move on to the next question. This is a question from a regular viewer of our show here called King Kashuma. Now he says, "G'day Dale, thanks for a great information all throughout the year." No, my pleasure. He says, "I'm hoping to squeeze one more in before the break. After your thoughts on James Hardie, still trending lower and don't own it yet, but watching and waiting patiently for the signs of life. Cheers, as always, King." So thank you very much for your support all year, and thanks to everyone for their support all year. But let's go and have a look at James Hardie and see what we think for James Hardie. Now I'll bring it up on the screen here. Let me just click here. So looking at James Hardie, as you rightly say, it's going down at this point in time. So it's a fairly hefty move down from that December high in 2021. Now let me I'll just show you how far that is from that December high to more recently, 52% down to that low there in November. So I'd like to see it hold, but it hasn't proven it's going to hold at this point. And that's really the question here for a stock like this, is has it stopped falling around there? Now there's nothing says to me there that really could. It is stopping the fall, but I would wait for that. And if we go and look at the more recent data history here, there's that low there at 27.39 in November. So that's the lowest low here. That was at 50% low there. Last week, you can see it's open, high, close, low. Look, I do think this is probably likely to be broken. I think if it does fall below that low of this week here from November, that 27.39, I think it could go a lot further. So I think it's way too early, King Kashima. I don't think this is a stock that I would be interested in right now. If we do find support and it starts to move up from here before breaking that low, not before breaking low, if it doesn't break that low and starts to trade up from here, then I'd more than likely change my opinion, but I really wouldn't get excited till at least starts breaking that sort of $35 mark. But right now, it's not a stock that I think I'd probably have it on my watch list, or I definitely would have it on my watch list. I just wouldn't have it on something that I'd be looking at buying now. And I'm not saying, I know you don't own the stock, or you don't mention that you own the stock, so you'd be looking at buying it. But I think there are better choices at this time on the marketplace rather than looking at James Hardie. But thank you for your support for this channel. I know you're sending a lot of questions, as have a lot of people. But the thing is over 90% of people who watch these videos don't ever ask a question. They just sit back and they're more passive. And that's the thing that I'm trying to discourage people to be passive. To me, you need to be active, and learning is about watching, listening and doing. And if you just watch, you're not really learning. You're getting some information. You're not getting education, and that's the issue. And that's why with our courses we have videos, there's audios, there's visuals, there's reading stuff, there's doing stuff. And that's why we get huge success out of our students, even on our beginner getting started trading mentor course, which seriously is as cheap as chips. And I can't understand why more people don't do that. It's under $2,000. I answer every single email for that. So I'm there to support you and hold your hand through that course to make sure you're successful. So really good Christmas present for yourself. If you do want to have a better 2023, I can't think of a better Christmas present for yourself than getting into our Trading Mentor course, and better still our diploma course. So if you are thinking about, studying in 2023, just give us a call. And, as I said, we have a special offer on our diploma course. And I think it lasts for another week or two. And it is worthwhile doing it. And I guarantee you will love the course, as everybody does. I mean, we get so much positive feedback on our courses. So give us a call, 1300 858 272. Now I've got a question from Adrian, who says, "Hi, Dale and team. Sad to see you packing up the set already. Hoping you could have a look at Elders for me. I bought shares at $11.80 about a year ago. My analysis is telling me that they were in a nice uptrend. They've been doing okay until recent AGM and announcement of the CEO and senior management retirement. Will they recover from this drop in the near term? They have triggered my sell, so if this month ends where they are now, I'll sell to protect capital. Stick to the rules, hey. Thanks for another great year of content." That's my pleasure. I mean, we packed up our studio about 2 weeks ago, actually, because we're building brand new studios in the city. We've been lucky enough to be allowed to use this massive space that I'm standing in now. It's not the proper studio for us with our proper sets, but we're getting new sets built and everything else. And we've been lucky enough to be, as I said, be able to acquire this studio for probably we're going to be doing some filming in here in February. Janine and I want to do a live educational stream from here probably sometime late January-ish, which will be streamed on talkingwealth.com. We want to start doing a lot more education. So we're really taking the show into a whole new level. So that's why we've launched talkingwealth.com, and just to broaden out the offering too. So, as we got so many great experts from financial planners, accountants, business entrepreneurs, some really successful people, TEDx speakers that we've interviewed, property people, not just stock market. And if you are interested in getting better results for your wealth creation, I'm talking broader sense, whether you're in business, whether you want to be, you want to understand more how to be an entrepreneur, that's in Talking Wealth. And really the feedback we're getting from people watching it, they're just devouring a lot of the content. So it really is, that's probably another good Christmas present for you. For a year's subscription, I think it's like $180 or something like that, but it's on there. But again, you get the chance to win $50,000 if you subscribe too. So, but anyway, thank you very much for your question. But let's go and have a look at the stock for you. Now, you did ask about Elders, and I'm pretty sure we did that from memory. Janine and I had a look at that last Tuesday. So please excuse me if we did do that. But looking at this right now, it looks bearish to me, and I don't think I've got any good news for you. I think, it's probably going to keep falling away. I would have exited this already. You said you bought about 12 months ago. So you're in a loss situation right now. If we bought, let's say, well, you'd be pretty close to it anyway. So last year, I think you said August last year, somewhere like that. Yeah, so you'd be in a loss situation right now. Not too big a loss situation. So you did say the price was, well, I can't remember what the price was you said you bought it at. But even if you bought it at the start there, the end of August there, you'd be sitting on a 15-18% loss there. So to me, the loss there is too much. I would have exited already. There's plenty of signals on that weekly chart to have exited this stock. Now, you said the fundamentals were all right, but look at this big drop over here. So obviously that would have, that's just part and parcel of the stock market. Occasionally, you're going to get one of these drop out of bed, because at this point here in November, you would have been pretty happy with that. You would have been in profit. You would have been sitting pretty, but then obviously what you were talking about, the announcement, I don't think that's going to recover anytime soon based on what we're actually seeing. I think sometimes it's better to rip the Band-Aid off and then go and put your money somewhere else, because at the end of the day, it's when you need to ask those questions, if you're in a losing situation, two things: you don't want to lose more, but you also want to make sure that you're not jumping out because of a knee-jerk reaction, because the stock, sometimes when they fall heavily, they'll bounce back up and you'll start trading up again. So Janine and I have had that situation numerous times with stocks over the decades that we've been trading, where sometimes we'll just manage ourselves out of position because sometimes the stock will get oversold based on some sort of announcement or news or what something's happened, and that'll start trading up, and then we'll manage our exit out. So you're right not to exit straight away. So I agree with that. But then what you'll see in the weeks following it, and what I've seen on Elders following it, is it's not going to recover at this point in time. So therefore the second choice is, do I hold to see whether it drops further or stays where it is, or do I exit? And to my mind, I'm always exiting in any time that situation is simply because I'd rather be in a stock going up than going down. And if I'm in a stock going down, I can't have my money in the stock going up. So that's the choice that you need to make. And I know it's a hard choice, and the hardest choice anybody makes is to sell something that's in a loss situation, because a lot of, especially us guys, we feel like it just validates that we were wrong in taking the trade. No, we weren't. And that's the thinking that we have to get rid of. And that's the stuff that we talk about on Talking Wealth, that we get into these sort of stuff about, the psychology of trading, understanding how we can make better decisions. So there's a lot of recordings on that. And we help a lot of people to understand that we do just make choices. You're not wrong in taking that trade. You fundamentally look good. It's just turned out the wrong way. So don't treat it as that you got it wrong. Just treat it as a nice learning experience that sometimes these things sorts of happen, because unless you take risk, you're not going to get the reward. And sometimes that risk means we get bitten a little bit occasionally. And that's why we always say cut losses short, let profits run. So right at the moment, I think you'd be wise to consider whether you might stay in that stock or exit and put your money somewhere else. But anyway, thank you very much for the question, and I really do appreciate it. And thanks for everybody for sending in their questions, not just in this week, but all year in the comments that we had, although I don't really, those people that are negative people, and those narcissistic people, they can go to another channel or whatever else. We don't like them. They get deleted on this channel, but we try and keep things really, really positive. But remember, subscribe to the channel if you do like this channel, and that shows your support for us. And if the more people subscribe and like on our videos, the more Johnny and I are going to do this. If people aren't doing that, then we're going to do a lot more on Talking Wealth. At the end of the day, it's about supporting each other. And, we do really want to support you on this channel and still keep stuff free on this channel to help people get going. But we do need your help, and that means hitting that subscribe button now and also hitting that like button. If you're doing that, then we know that you like the content and the channel is growing. If it's not, then we're going to be doing stuff elsewhere. So, but anyway, and we are moving this channel, we're not moving the channel, we're going to have that, but we are moving this stock market report to talkingwealth.com, as I mentioned. So we will still be doing some things here on YouTube, just not as detailed as this. On Talking Wealth, We've got a lot more flexibility to do a lot more than what we want in terms of teaching and giving a lot more stock market information, a lot more detail, which is exactly what you've been asking us for. You've been asking us to teach you more and do more and expand more. We're going to be doing that on talkingwealth.com, but you will have to pay for it because I know that you don't work for free, so Janine and I are not going to work for free either. So remember, subscribe to this channel, but head over to talkingwealth.com. But remember, we have our last live stream tomorrow night right here on YouTube. So that's between 7 and 8 p.m. Australian Eastern Daylight Savings Time. So Janine and I will be fired up for that one. We've got a great topic. Remember, hit that subscribe button now, click the bell on the right of it so you know when we upload and go live with our videos. We're having a 4-week break, as I mentioned earlier, but we're back in the new year. So on behalf of the team here at Wealth Within, we do sincerely wish you all a merry, safe and happy Christmas. And remember, if you fail to plan, you plan to fail. So I urge you to start planning for 2023 or the 2023 you desire, because for it to be, it's up to me. And if you've got that mantra, then you'll have a better 2023 than 2022. I've planned for mine. Let's see how you go with yours. That's it for me. I'm Dale Gillham, the Chief Analyst here at Wealth Within. Goodbye, good luck and good trading. Merry Christmas.